Let me start by saying that I've spent my life looking for value, real, tangible value, in businesses, assets, and opportunities. My approach has always been grounded in understanding what I'm buying, why I'm buying it, and what it's worth based on its ability to produce cash flow or serve a productive purpose over time. Bitcoin, that enigmatic digital creation, has been a topic of fascination, debate, and speculation for over a decade now. I've been asked countless times why I haven't jumped on the bandwagon, why I've called it rat poison squared, or why I wouldn't touch it with a 10-foot pole. So let's set the stage with a thought experiment. I will buy Bitcoin if certain conditions are met. Let me walk you through what those conditions would be, why they matter, and why, in my view, Bitcoin remains a speculative gamble rather than an investment in the traditional sense. First and foremost, I'd buy Bitcoin if it could demonstrate itself as a productive asset. By productive, I mean something that generates value over time, cash flow, dividends, or some measurable economic output. When I buy a stock like Coca-Cola or Apple, I'm buying a piece of a business that produces goods, serves customers, and generates profits. When I buy a farm, I'm buying land that can grow crops year after year. Even a bond, as dull as it may seem, pays interest. These are assets that work for their owners, creating wealth through their operations. Bitcoin, as it stands today, doesn't do any of that. It's a string of code, a digital token that exists on a decentralized ledger. It doesn't produce anything, pay anything, or contribute to economic activity on its own. Its value, if you can call it that, depends entirely on what someone else is willing to pay for it. That's not investing. That's speculation. If I'm going to put my money into something, I want it to have intrinsic value, something that can be measured by its ability to generate returns over time. Now, some Bitcoin enthusiasts argue that its value lies in its scarcity. Only 21 million coins will ever exist, they say, making it a hedge against inflation or a store of value, like gold. But let's think about that for a moment. Gold, for all its flaws as an investment, has industrial uses, cultural significance, and a history stretching back thousands of years. Bitcoin's scarcity is artificial, coded into its protocol by a pseudonymous creator. And scarcity alone doesn't make something valuable. I could create a limited edition of Buffett Beanie Babies, cap the supply at 21 million, and it still wouldn't be worth a dime unless someone wanted to buy them. If Bitcoin were to evolve into something productive, say, a backbone for a global financial system where transactions generate fees that accrue to holders, or a platform for decentralized applications that produce measurable economic output, I take a closer look. But as it stands, it's a non-productive asset, and I don't invest in things that don't work for their owners. The second condition for me to buy Bitcoin would be if I could calculate its intrinsic value with reasonable confidence. Intrinsic value is the discounted value of the cash that can be taken out of an asset over its lifetime. For a business, I can estimate future earnings, discount them to the present, and arrive at a rough figure of what it's worth. For an apartment building, I can look at rental income. Even for gold, I can consider its industrial demand and historical purchasing power. Bitcoin, however, is a black box. There's no cash flow to discount, no earnings to project, no tangible output to measure. Its price is driven by supply and demand dynamics, sentiment, and speculation. If I asked a room full of Bitcoin investors what its intrinsic value is, I get 100 different answers, most of them based on hope, hype, or circular logic. It's valuable because people think it's valuable. That's not good enough for me. Some argue that Bitcoin's value comes from its role as digital gold or a hedge against fiat currency debasement. I'll concede that governments have a lousy track record of managing money supply. Look at the US dollar's purchasing power over the last century, eroded by inflation. But if I'm worried about inflation, I'd rather own businesses that can raise prices, like Coca-Cola or See's Candies, or assets like farmland that produce goods people need. Bitcoin's hedge argument assumes it will hold value in a crisis, but we've seen it crash alongside stocks in market downturns, like in 2020 or 2022. So much for a safe haven. If someone could show me a clear, rational way to calculate Bitcoin's intrinsic value, based on something it carries or some other concrete metric, I'd be open to reconsidering. Until then, it's like trying to value a lottery ticket. The payout might be big, but the odds are murky, and the ticket itself is worthless unless you win. Another condition for me to buy Bitcoin would be if it became a widely accepted medium of exchange for everyday transactions. One of Bitcoin's original promises was to be a peer-to-peer electronic cash system, a way to buy coffee, pay bills, or settle debts without intermediaries. If it achieved that vision, say, if I could walk into any store in Omaha and pay with Bitcoin as easily as I use a credit card, I'd see it as more than just a speculative asset. The reality, though, is that Bitcoin is clunky as a currency. Transactions are slow, fees can be high during peak times, and the price volatility makes it impractical for day-to-day use. Imagine buying a $5 latte with Bitcoin, only to see its value swing 10% by the time you finish drinking it. Merchants don't want that kind of headache, and consumers don't either. Sure, there are places where Bitcoin is accepted, some online retailers, a few tech-forward businesses, but it's a tiny fraction of global commerce. Compare that to Visa or MasterCard, which process billions of transactions seamlessly. There's also the issue of scalability. Bitcoin's blockchain can handle only a handful of transactions per second, compared to Visa's thousands. The Lightning Network, a Layer 2 solution, aims to fix this, but it's still in its infancy and adds complexity. If Bitcoin could solve these technical hurdles and become as ubiquitous as cash or cards, I'd view it differently. It would have utility, and utility creates value. But we're a long way from that. Regulation is another hurdle. I'd buy Bitcoin if it operated in a clear, stable regulatory framework that gave investors confidence and reduced illicit use. Right now, Bitcoin exists in a gray area. Some countries embrace it, others ban it, and many are still figuring out how to classify it. Currency, commodity, security? This uncertainty creates risk. I don't like investing in things where a government could pull the plug overnight. Then there's the issue of illicit activity. Bitcoin's pseudonymous nature makes it attractive for money laundering, ransomware, and darknet markets. While the blockchain is transparent, tracing wallets to real-world identities is hard. I'm not saying Bitcoin is inherently criminal, but its association with illegal activity doesn't help its case. If regulators cracked down hard or imposed strict KYC/AML rules, it could clean up Bitcoin's image, but might also undermine its decentralized ethos, alienating its core supporters. Stability is another issue. Bitcoin's price swings are stomach-churning. $69,000 in 2021, $16,000 in 2022, back to $60,000 in 2024. That's not an asset, that's a roller coaster. If Bitcoin's price stabilized, perhaps through widespread adoption or institutional backing, I'd be more inclined to consider it. But stability requires trust, and trust requires regulation and infrastructure that Bitcoin doesn't yet have. I'd also buy Bitcoin if it clearly outperformed other investment options. My capital is finite, so I allocate it to opportunities with the best risk-adjusted returns. Right now, I can buy wonderful businesses at reasonable prices, companies like American Express or Burlington Northern, that generate steady cash flow and have durable competitive advantages. Why would I trade that for a speculative asset with no earnings? Even within the crypto space, Bitcoin isn't the only game in town. Ethereum, for example, supports smart contracts and decentralized applications, giving it more utility than Bitcoin's single-purpose design. Stablecoins like Tether or USDC offer price stability, making them better suited for transactions. If Bitcoin can't compete with these alternatives, or with traditional investments like stocks, bonds, or real estate, why should it get my money? Finally, I'd buy Bitcoin if it proves it can survive the test of time. It's been around since 2009, which is impressive, but 16 years is a blip compared to gold's millennia or the US dollar's centuries. Technologies come and go. Remember MySpace? Netscape? Bitcoin's blockchain is groundbreaking, but what if a better protocol emerges? Quantum computing could threaten its cryptography. Governments could launch central bank digital currencies, CBDCs, that combine blockchain's benefits with state backing. If Bitcoin is still relevant in 50 years, I'll tip my hat. Let me be clear, I'm not a Luddite. I understand the appeal of decentralization, the distrust of central banks, and the excitement around new technology. But excitement isn't enough. I've seen too many fads, tulip bulbs, dot-com stocks, beanie babies, where speculation drove prices to the moon, only to crash when reality set in. Bitcoin's chart looks like those manias, parabolic rises, brutal corrections, rinse, repeat. I also worry about the herd mentality. When everyone from taxi drivers to TikTok influencers is talking about Bitcoin, it's a red flag. Markets are driven by psychology, and crowds can be wrong. In 2021, Bitcoin's surge was fueled by retail FOMO and easy money from stimulus checks. In 2022, it crashed when rates rose and liquidity dried up. That's not the behavior of a mature asset class. Then there's the energy issue. Bitcoin mining consumes as much electricity as some countries, which isn't just an environmental concern, it's a cost. If energy prices spike or regulations tighten, mining profitability could tank, undermining the network's security. I'd rather invest in businesses that don't burn through resources to maintain their existence. At the end of the day, my reluctance to buy Bitcoin comes down to my investment philosophy. By what you understand, focus on intrinsic value, and think long-term. Bitcoin fails those tests. It's not that I think it's worthless or doomed to fail. Maybe it'll surprise me and become the global reserve currency someday. But I don't invest in maybe. I invest in businesses and assets I can analyze, value, and trust. If Bitcoin meets my conditions, becoming productive, quantifiable, widely accepted, regulated, stable, competitive, and durable, I'll gladly reconsider. Until then, I'll stick to what I know: great companies at fair prices, generating cash flow I can count on. Bitcoin might be the future for some, but for me, it's still a gamble, not an investment.